Joining us now is Mark Mahaney, RBC's lead internet analyst. Mark, thanks for being with us. So I'm looking at Amazon, Facebook, Netflix, stocks you cover. First of all, you're right on Facebook. You said in the midst of that Cambridge Analytica stuff that you were sticking by it. Netflix, though, where does it go from here? You had an outperform on it with a $360 price target. I believe it's trading at $400 now. Has that run too far?
Yeah, it's rare that I'll have that kind of discrepancy between a rating and a price target. I'm going to try to be open-ended and open-minded about it because we can find our way to $25 in GAAP earnings by 2022, and I think the market would discount that back but put a hefty premium on that. So I think there's a pathway here to a $600 to $700 stock long term. There's no doubt that expectations are super high, but this is the inflection point story in the group this year. In other words, accelerating revenue growth and expanding margins because they got successfully through a price increase because the content is becoming truly compelling for users across the world. So I think the fundamental story remains intact. It's a small buy for us given the current valuation, but we wouldn't downgrade, not on an asset like this. And the last thing to keep in mind, back half of the year, what Netflix has told people is that the content spending and the marketing spending is going to be back half loaded, weighted. So if you've had a kind of an acceleration in the first half of the year, it could accelerate even more given greater content spend because that's really what drives the sub base.
Any tariff risk among these stocks? I mean, Amazon, perhaps. I mean, there are a lot of goods coming into the U.S. from China via Amazon, right?
Yeah, John, you're right. That's the one that has the most tariff exposure. You know, it's hard to quantify. My guess is we're talking about single-digit %. So it's not something that we've been fully able to quantify to date, but that's the one where I would worry the most about tariff issues.
I got a wacky idea, Mark. It's Friday. I'm feeling wacky.
Okay. All right, Michelle.
Netflix has had this tremendous run so far this year, and I get the subscriber growth and blah, 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 blah. However, I also think one of the reasons Netflix has been able to run so much is because long-term interest rates haven't gone up nearly as much as everybody predicted that they would. And that's one reason why it's still safe to be in that stock, because with a massive multiple like that, you got to hope interest rates stay low, right?
Yeah, there's also something very specific to that company, too. They're raising a fair amount of debt to finance this content spend, this marketing spend. So a rapid escalation in interest rates would reduce their ability to obviously to get procure debt as inexpensively as they have in the past. So there's kind of a double-sided there's a potential two knocks on Netflix's stock. So it's further down our hit list, frankly. The two that are actually at the top of our hit list are Facebook and Google, and both of them have very interesting back half catalysts. Look, we pointed this out with Facebook. We're seeing now successful attempts to monetize these two messaging applications that they have, WhatsApp and Facebook Messenger. And those are both billion-plus user platforms that have generated zero in revenue for the company to date. As they start to monetize that could have a material impact on the P&L. Not immediately, but you know the multiple would re-rate, would go up higher in expectation, anticipation that estimates would go up. And then with Google, real quickly, back half of this year, Waymo goes commercial in the back half of the year. This is one of the bigger catalysts you can find across large cap internet. And if that commercial launch just initially is successful, Google has also gotten zero value from the market for Waymo. And that won't continue to be the case if that launch is successful.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.